Hello, everyone. ECB day. So far, what Draghi, if Draghi has spoken, I don't believe the press conference is yet, but Draghi has made the euro even more soggy. So new lows, but diverging. If I was short, I'd be booking some right here. I'm not short euro. I'm short euro pound, which continues to work. We're at one of my initial targets on EG. Gold up 5, silver unchanged. That's a little different action with what the gold silver ratio has done. Way overdue to correct that. So just looking for EG. And I want to welcome all our viewers from investing.com. So here we are at one of the lines here at 89. I still think that before it's over, we're going to head down towards this 87 level, which is going to be right here around 61.8. No reason to buy it. Of course, if you're short right now, it's nice to take profits. If you have multiples, I would hold a core. I still have a piece left here. So continues to correct. This is a correction of this huge uptrend. Eventually, we're going to break out to new highs, but taking advantage of this throw over from last week. I want to just take a quick look at the gold. Copper with the S&Ps at new highs. We'll see how much they could generate. Still bearish copper. Crude took a hit. I just want to look at the gold here. So here are the S&Ps at 323.5. What's interesting is even on the 1 hour, we're really not confirming this high. It's close. Even short-term stuff, even the 15-minute stuff. So I know a lot of people are looking for 30, 40, 30, 50. Those numbers have been bandied about for people wanting to take shorts up there. Something I've discovered over the millennia that I've been doing this is that when the whole market is looking for one number, one target, one objective, this is what usually happens. It either never achieves it, or if it gets to that number, it is not meaningful. That's just something I've recognized over the years. So definitely the market still squeezing shorts. See the 4 hour here. We still have glaring divergence on the daily at new highs here. And it's starting to look like a 1, 2, 3 up here. What the heck? I'm going to sell into this up here. Anyway, Aussie Kiwi. All right. So I've been patient, and I think we're going to get this 78.6 level. This could be a 1, 2, 3, and this could be a 1, 2, 3. So looking at it down around the 103.70-ish level, about another 30 pips lower, I'm going to go for this as well. And crude is all over the place. Big failure yesterday, no follow through, bounce, no follow through. This does look like a continuation formation, but just standing aside on that. And US dollar yen under just a little bit of profit taking. I thought we'd get one more decline to the lows down here, take out the lows one more time. But we're going to need a stock market correction for that to happen. And I still think there's a possibility of that setting up here in the next few days. So we'll see. Bonds still maintaining some shorts in TLT, but rates are softening up here again as well. I think we're close. Yeah. So I don't know if we're going to test this 1, 2, 3 bottom here one more time before we get a rally. Still thought we could head up at least towards 220 before we got this low. Peter Goodburn has targets down around 170-ish before we get a trough in rates. So Maybe we're just going to take care of that business now. It has this labeled as a 4. So even if it's a 4, why can't we have A and this is B and then we get a C and then one more decline? And just take a look at the yuan. So if the yuan is going to sell off one more time, that too should be constructive for gold. And here's the gold right here, outperforming the silver for the first time in days. I'm not saying silver is doing anything wrong, but the gold-silver ratio, let me just take a look at it. But before I do, I'd be watching the gold up here for a possible third drive to a top. I was thinking something like 1480-ish, 1485. And here's the gold-silver ratio, which for the first time in days is beginning to correct. And what you could have done a week or so ago was exchange your Krugerrand for 90 Morgan silver dollars. And we were due for this bounce, wouldn't you say? So this is a gold-silver ratio. I think it's turned. Maybe get a rally back to, this 89.90 level, which means gold's going to hold up better than silver for a bit. But if this is just a first wave down, pretty powerful first wave down, talking about almost 8 handles. So why can't we rally back halfway towards 90 to put this back on? So after this rally occurs, gold your preferred short, silver your preferred long. For while it's going up, gold your preferred long, silver your preferred short. So have a great guest today, and she's been a currency bear for a long time. Amelia Bordeaux used to be contributing editor on CNBC. I remember watching her many times. She has her own thing going, and I'm sure she remains bullish a dollar, bearish cable, bearish euro, looking for lower levels. Maybe she has them fine-tuned. Yes, newsflash, even the best are wrong, Tom. Yeah. Okay. In fact, you know what? I chatted with Peter. I don't think he's, just because we made a marginal new high by how many pips? 4 so far? Yeah. Okay. So anyway, I'm wrong every day. I don't know about you, about things. And you know what? It only takes one to be right if you manage things correctly when you're wrong. And I don't know a trader who's not wrong. So that's it. So therefore, great lesson. Okay, Tom? Anytime you see anybody, even the best, you don't take anyone's ideas blindly. You may consider it, but you have to go to your work and see how it fits in with your work. And maybe it gives you a bias, but it still has to be what you see to be compelled to take risk. So that's what I do. I pay attention to a lot of people. Really like the team that we have here at ForexAnalytix. I pay attention to what they're thinking and their analysis, but I don't just blindly take signals from anybody. So the key to that also, I'm glad you brought it up, is say, for example, you find someone who's really an excellent trader and you're making money with them. Like maybe you have a signal service. What happens when they stop their signal service or things go south and you didn't learn the methodology behind it and you want to be self-directed? Then you're out there on your own on a life raft. But if you're learning to be self-directed and just maybe subscribing to different services like ForexAnalytix, you have great input to consider before you do anything. Okay? So thank you, Tom, for that question statement. And TLT, this is going to be important to see if TLT, I still don't think, even with what yields are doing, TLT is going to make a new high. We'll see. I still think there's chance for a failing rally here, and this is the 20-year. So we're still, I don't know, about a handle and a half away. So far it's been, it's probably going to test a 61.8 level again. We'll see if there's enough juice with what's going on here to make a new high. I still think that these guys are trapped. Everyone's looking for the Fed to bail them out, and maybe the Fed doesn't bail them out. And if we start accelerating back through 131, 128 to 126, something like this from wherever this second wave peaks out is viable. So, Steve, you on deck, bro?
I'm here.
Yeah.
Oh, and Stell.
Nobody cares about you. He asked about me.
Oh, well, yeah, Draghi must have said something. There was some pretty wild, volatile action for a while. Was it just
Draghi hasn't spoken, mate.
Okay, so it was just their announcement because things got a little.
So basically, what happened is Draghi obviously is going to leave without really doing anything. He's going to leave Lagarde to go and what's the expression? I can't remember. But anyway, to do the heavy stuff.
Heavy lifting.
So heavy lifting, yes. So basically, we're going to wait for the Q&A, obviously. But in the statement, the most likely scenario seems to be now some kind of an easing package in September, which could be any or all of rate cuts, tiering deposit rate, and strong forward guidance, and more QE, and the kitchen sink, basically. So and they
as I said,
they said explicitly they're going to examine options for new asset buying.
If you remember, Stelio, when they postponed like a year ago the possible date for them hiking, if you remember what I had said back then was,
yes.
Okay, so then there is absolutely zero chance that they're hiking within this business cycle.
Yes. The guidance was that they were going to stop buying stop buying in the end of the year, which happened, and then they're going to start hiking in summer of 2019, and here we are.
Yeah, no chance in a million.
So we're gonna look at the
next move is going to be lower rates, more QE, a lot of speculation about stock buying as well. All the usual rumor mill. We've had that before, if you remember, in 2011, because in 2011 there was like a very, very high chance that the global economy would go back in a recession so soon after the previous one. So the central banks had already started, circulating the several plans they had in mind, of what they're going to do during the next recession. And we're again in this phase. I mean, you get new rumors about, new tools and possibilities and things they've been envisioning and discussing and brainstorming about. And of course, it's going to take some time until we start seeing, new guns on the table. But I think that having to do with the old stuff, which is rate cutting, quantitative easing, it's going to be very soon.
Yes, I agree. And you know what? If you want to take a step back and look at the big picture, and you compare, the European Union to the US, Japan and the UK, and etc. Look at what's happened to the European Union and to rates over the last 10 years, which is supposed to be a period of expansion. They didn't do anything. They stayed at zero. At least the Americans, they managed to hike to 225, 250. And now they have some ammunition. So what's going to happen with the European banks?
In my opinion, still, as I've said before, I think the fact that they managed to hike in the US was purely coincidental.
I agree.
If Trump wasn't elected, producing in essence that fiscal stimulus package and reinvigorating like the animal spirits, I think that the US wouldn't have hiked as well. It would be in the same situation.
Yes. Okay. I agree. But, I would say that over the past 2-3 years, whatever, the US was doing a little bit better than Europe. And you see all the leading indicators out of Europe now, and the banks, the European banks, are struggling, obviously, with the curve being so flat, they can't make money. And what's going to happen when now they will start cutting and doing more QE? So just something to think about. Don't get me wrong. I think the dollar is also going to suffer a little bit in the next, 6 months or a year, 2 years. I don't know exactly the time frame, but I'm not bullish the dollar. Let's put it this way. But I think the euro is even in a worse shape. So.
Oh yeah, absolutely, absolutely. The data so far supports that. Of course,
Yeah,
we have to take into account that up to a point, all that is priced in. So the question is, how is the relative performance from what the market is pricing in currently to, X months in the future, whatever, the market is pricing in 6, 9 months. I mean, there's a debate about that. How is the relative performance going to be?
Yes.
Yeah, exactly. So, yeah, but we'll see. I think by looking at the euro, I think that the euro is just, in essence, waiting for a nod from Draghi to fall much lower. At least that's how it looks at the moment. I mean, the statement already gave the green light that more stimulus is coming. I think the market is going to be focused on how determined the central bank is to start and how soon the central bank is determined to start the next phase of monetary easing. And I think that based on that, the euro is going to do whatever it's going to do. But at the moment, it looks very, very heavy. So nothing is impossible, but from what I see here, I think that the vast majority of the chances are that the euro is going to resume lower for the day.
It's amazing though, because a year ago, 6 months to a year ago, you were saying there's no way the Fed's going to continue hiking. Remember, there was 3 or 4 more hikes priced in, and the ECB was supposed to be hiking, and you were saying, nope, the next move is down, and we're there. So it's incredible how things can change within 6 months or 9 months. Anyway,
yeah, the first secret to guessing what the central banks are going to do is completely ignore what they're saying.
yeah, that's true.
Completely ignore what they're saying.
Okay, so speaking of Europe, just something to note.
Want to show your chart, Steve?
Yeah, absolutely.
Yeah. We had the German IFO Business Climate Index. It's quite an important index, that, because it shows the business sector's outlook for the next 6 months, and that dropped from 97.5 to 95.7. So it's much lower than expected, and it's just showing that the climate is deteriorating. The other thing we had, and we need to talk about before the Q&A session on the ECB, is the UK. So we had Boris Johnson, who is the new prime minister. I never thought I'd say those words, but he is. And and he announced his cabinet. Predictably, a big chunk of the of Theresa May's loyals are out, and there are some people who are retaining their posts. But he did appoint Sajid Javid, however you pronounce his name, who's an ex-banker, used to work at Deutsche. Actually, my brother knew him. And he's the Chancellor of the Exchequer, so the finance minister. And Priti Patel also was made Home Secretary, and Dominic Raab, who was the Brexit secretary, whatever it's called, the exact name, was made Foreign Secretary. He's been a big supporter of Boris Johnson, so he got his nice spot. The thing to note is that the pound, even though Boris Johnson has come in, he's a big Brexiteer. He's appointed quite a few Brexiteers in his cabinet. The pound actually is strengthening. And for people who don't understand this, myself included, I try to think about it. And the thing to remember, after all these years in the markets, the thing I always remember is that uncertainty is the worst enemy for a market. Indeed. So now what we're seeing is a bit of a loose cannon taking over, but he's outlined a rough outline. The rough outline. I don't know how to say it, but anyway, he's made a rough outline of what he's going to do, and he's going to.
At least the chances that we're going to get some resolution sooner rather than later have increased, and I think that's more important than anything at the moment.
Yes, and because also he has said that
if this goes on for a few more years, it's not going to matter after that.
Yes, and he's showing that he's going to be more prepared for a no-deal Brexit by doing more fiscal spending and by actually doing something. So the market is seeing this and he's saying, right, if we get a deal, great. If not, well, we're starting to get prepared for that, and there's going to be stimulus in the economy. So obviously it's going to be a shock, but
you also have a huge political advantage. In essence, oppositely from what was happening with May when she got appointed, he has already said that, I'm okay with going for a no-deal Brexit if it comes to that. So that means that, from a political perspective, nobody can blame him if it comes to that, because,
Yes.
he got elected by his party as the new prime minister, after making those statements. So now everybody's informed, right? So in essence, he has the political power and the backing to, proceed
Yes.
with that if it comes to that, while that wasn't the case with May.
Yes, and the Europeans knew before that Theresa May, she said it explicitly, we need to take the no-deal Brexit scenario off the table. They knew that this is something that she would not allow, or she didn't want to happen. So they were sitting back, relaxing and saying, right,
waiting.
we're gonna find a way, But now you have this guy here who is prepared to do everything, and he said it from day one. And now I'm sure the Europeans are sweating a little bit to see what's gonna happen. So,
yeah, one thing is for sure, I don't know if they're going to capitulate and renegotiate, but let's take it oppositely. There was zero chance that they would do that with May.
Exactly.
Zero.
Yeah.
I don't know what the chances are now, but they have to be higher than zero.
More than zero, yeah.
Yeah, exactly.
So we're watching that. And you know what? October is not that far away, right? August, September, 3 months.
Oh, yeah, of course.
Plus we have a break in the parliament, right? Until, what is it? End of August or whatever it is. So there's not going to be much time left. That's for sure.
Indeed. And keep in
yeah.
mind, as I was saying yesterday, as long as the euro is going to remain under pressure through Europound, which is, if I remember right, the fourth most liquid currency pair, the pound is going to be finding some support due to that as well.
Yes, and Amanda's been on fire with the pound, and
Amanda has been on fire with the pound since ever.
Yeah, since forever. Yeah. So
yeah, I mean,
that's been great.
She has been fading any strength. At some point, she's going to be wrong, but it won't matter at all because she will have been right for so long.
Yeah.
And that is what a good trend trader does, right? I mean, you know that at some point you're going to be wrong, but if you know what you're doing, you're going to take your loss. But if you've ridden, if you've ridden the trend until then, it doesn't really matter because
who cares? Yeah, exactly.
It's already worth it. Exactly.
Yeah.
Okay. Excellent.
Well, I'll be here for the comments for the Q&A. So
the whole market is waiting for the Q&A, and that is going to be the market moving event. I don't expect much from the Q&A itself, but I do expect from the initial comments that Draghi is going to produce, and perhaps the first just few questions, because after that, generally, I'm very disappointed with journalists in such events. I mean, as an observer, I can always think of several questions that would make sense, and they never ask them. They never ask the tough questions, and anybody can guess why, but that's not their job. But I do expect that, as I said before, look at the euro. The euro is currently testing the previous lows exactly, and it has told here it's just waiting for a little nod from Draghi to fall towards 110 most likely. I mean, that's the next area of support. There is some support at 110.2, 102. So that's it. I really think that I look at this RSI. This ascending trend line in the RSI as well, it's already broken to the downside. So I think it's totally up to Draghi. If Draghi wants to push the euro lower, the market is ready for it. And I would be surprised if he wants to do anything else. Now, bonds, obviously, at the highs of the day. German bond yields Stelio below 0.4%. I think minus 0.41 or something like that. The next upside target that I had set is now very, very close. It's getting very close at 175.95. That's the 161.8% extension of this whole corrective move. We've had this correction unfold from September 2016 until we actually bottomed out in spring of 2018. We remained, of course, until December 18 in this descending channel, and once we broke above it, that was it. I mean, the market is now following the previous trend, which was one of the best established uptrends. You can see it here if I zoom out. At some point, we're going to see some type of a corrective pullback. Of course, nothing moves exactly in a straight line, but for the time being, I see absolutely no reason why you would want to fade this strength, especially if Draghi delivers. I wouldn't be surprised to see today's bond move extend, as much as it has already moved, and we are already what, 0.4% higher. I mean, why not even 1% higher? It's not going to be the first time, right? Now, at the same time, we were looking at the chat room a while ago, the Euro Swiss, as you see, most obviously, the S&B is on watch, especially on an ECB day. They're trying to defend this 110 support area. You can see how important it is, because if it breaks lower from a technical perspective, then this opens the door for a move towards 108, 1075. And I'm pretty sure that the S&B is on call, intervening, and will try to help the Euro Swiss hold this low. From a risk reward perspective, it would even make sense for somebody to try to buy it here. I mean, you're risking very, very little. And if we have a look at the USD Swiss, because that's also highly correlated, there is the USD Swiss. And this is a nice technical event that we're seeing happening as we speak, because we've had this corrective move lower, because so far I can only interpret this as a corrective move lower. We've had this corrective move lower unfolding within this expanding triangle, a megaphone formation. And we are finally, I mean, since a few minutes ago, breaking above it. So this tells me that it's very, very likely that we're going to continue higher from here. Also, a very nice risk reward trade, 98. If that's the case, we shouldn't revisit the 98-cent area where we found this low. So I do think that the USD Swiss is presenting an interesting trading opportunity here as well. So Stelio, Draghi should be starting within the next 3 minutes, right?
Yep, 2-3 minutes. That's correct. I'm here standing by.
Okay, go ahead and interrupt me, for whatever we get at any given point. Let me open the chat.
One of life's little pleasures to be interrupting you. Yeah.
Oh yeah, absolutely. I'm doing it all the time. Trying to open the chat. Oh yeah, here it is. It was hidden. Okay, so if you have any questions, ladies and gents, this is your opportunity. I don't have much to cover. I mean, since yesterday, the only thing I want to say before we start, because the whole market is currently waiting for Draghi to keep moving. Keep in mind that there is a big danger that this failure from the Aussie and the Kiwi is going to lead to lower lows. Okay, because potential inverted head and shoulders formation got invalidated after just 1-2 days of trading above. Let's see. We also have data, Stelio, right? Not that it's going to be moving the market ahead of the ECB. US initial jobless claims in 30 seconds.
Durable goods.
Good orders. Yeah. That's what we are expecting. So let's see what we get from those.
Yeah, we have a good chunk of US data. If it wasn't for the ECB print conference, they would be a bit more important.
Let's see what we get.
Okay, so we have 30 seconds to go. And anything else worth saying?
Okay.
The boy who cried wolf said the S&Ps are topping today.
Well, they don't look like they're topping, do they?
Wolf. Rough.
We are already a few seconds overdue for the data.
No, we're not. 10 seconds to go.
Really?
Yeah.
That's what my clock says.
Your clock is wrong.
Huh. That is quite interesting.
Okay. It should be coming out now. Jobless
There
claims
we
better. Durable goods, very good number.
Oh yeah, 2% versus 0.7. So that's a good print. Very, very good. Oh, previous revision of those Telio is much, much worse than. So
So
it's a
that
mixed
washes
bag.
it out.
It's a mixed bag having to do with durable good orders because we have a good print this for this month, but the previous one was revised like 2.3% lower. So you know,
So
it's a
they
mixed bag.
needed that. They needed that revision to, keep justifying the quarter point or whatever they're going to do next week, right, guys?
For durable good orders, also positive. Initial jobless claims and continued jobless claims, more or less as expected. So that's really a non-event.
Look at the goods trade balance, minus 74 billion. I mean, it's been going south for the last years.
It's because the tariffs are working.
Yeah.
Well, you didn't even get a bounce on that news. You didn't even get a bounce hardly at all on the 10-year yield.
Yeah.
A little. We're almost at new lows.
I think that I think it would be almost impossible to see any big movement ahead of Draghi because you know how it is. I mean, even if the dollar for idiosyncratic reasons moved, that move nobody would invest, ahead of Draghi because that move could immediately get erased the first second he opens his mouth. So I think that the market is just going to wait and not react to these data. So Draghi should be starting any second now. So let me go back to the Aussie. Go ahead.
I think we should hire Draghi, bring him in to the family here, give him something to do. I bet he can't trade.
He's a bit expensive for us, just a little bit.
I think
it'll be pro bono work.
Exactly. I think he should arrange an interview now that he's going to have less duty to.
President Trump would love to hire him and fire Powell. He loves Draghi.
I have no doubt about it. Although I don't consider Draghi so much as a puppet guy.
Yeah.
No, I really do. I mean, in comparison with other central bankers I've seen, I think he's definitely not one of the worst. My personal opinion.
From you, that's a high compliment.
More, okay.
For a central banker,
let me
he's
be
great.
Very
he's not one of the worst.
Let me be very clear. I would have really no compliment for any central banker. I think they've contributed massively in destroying the economies and capitalism, in the way it's supposed to function. Yeah, and you know what the fun part is? It's like they're pyromaniacs. They go and put on fires, and then they come to the rescue by temporarily extinguishing the fires, and then they're
relighting them or throwing gasoline on.
Yeah, exactly. So. Okay,
let them eat cake.
So Euro Yen, by the way, if you remember, I talked about that during the week ahead video. Euro Yen was breaking below this triangle. As it seems today, it's bound to continue lower. We've now had like a huge streak of down days with one little exception there. I really see, as I was saying in the week ahead video as well, I really see no support until we retest the spike low at 118.82. So, whichever euro pair I'm looking at out there, let's also have a look at the Euro Aussie, the Euro Kiwi, the Euro CAD. You're going to see more or less the same thing. So, Euro Aussie, just look at this nasty daily candle. Keep in mind, and this is very important, look at this trend line, support that we're breaking below, right? This has defined this recovery since February 2017. So this is like a 2.5-year-old trend line that we're poking below here. So look at this. I mean, we had like an update yesterday, but look at this reversal candle we have so far today, getting rejected from retesting, in essence, the 200 daily moving average. Look at Euro Kiwi. Same deal here, getting rejected. Look at EuroCAD. right? So any euro pair I'm looking at from a technical perspective, there is not even a single one that looks good. Look at euro pound. Euro pound accelerating lower now that it has broken, from this ascending wedge. We even have two patterns in play on that. I really can find no support until 88.50, 88.60. And is that going to be enough? We'll see. The only reason I'm a little bit skeptical about it is because, pound at any given point can really. Stelio, Draghi has begun, right?
Yes, a couple of comments actually, if I can. I was
Of
about
course,
to
of course. I told you, interrupt me at any given moment.
Yes. Okay, so he said first thing, interest rates to remain at where they are or lower, at least through the first half 2020, and as long as it's necessary, to continue to ensure the continued conversion of inflation to our aim. He actually did talk about the symmetry of inflation, although it's been always lower, but that's another case. And he said he underlined the need for a highly accommodative stance of monetary policy for a prolonged period of time. So, in line with what the market's expecting.
Yeah, so far, nothing different than what we've got from the written statement. So the market is not going to move on that because that's already priced in. Let's see if he can elaborate further on what they mean by fresh stimulus. So how big of a bazooka are we talking about if I am to speak with older ECB terms? You remember the big bazooka days, etc., Stelio?
Yes.
Having to do with downside targets, I think that the best approach here is the usual fib extending the last rebound higher, which, as we had said multiple times, was perfectly channeled at perfect ABC. That gives us an initial target at 110.24. That's a 127% extension. But as you see, for example, the 161.8% extension comes at 1092. So possible downside targets here. The euro is striving to hold the previous low. If, as I said before, if Draghi pushes it just a little bit further by, showing to the market that, they're willing to go big on stimulus, I think that the market is going to lose that support. And once it does, and if and once it does, I think that we're going to see an acceleration lower because then several stop losses are going to start getting tripped as well. Durable goods stumble over here despite bounds. ECB's Draghi, geopolitical factors, protectionism impacting sentiment, inflation pressures muted, significant stimulus necessary. Exactly what you said, Stelio. Incoming info since last meeting indicate softening global growth dynamics. So far, nothing but dovish comments. But as I said, he needs to deliver a little bit more so we can actually see the euro breaking this level. And once that happens, I'm pretty sure that it's going to be much easier to accelerate from there. What do you think about Aussie Swiss? Let's give a few minutes to Draghi and see how the main currency pairs are moving, and I will be more than glad to cover Aussie Swiss for you, mate. Okay. Looking for support at 110.50 on Euro USD. I don't really see any supported level there, but probably you're looking at something else. I mean, there are a lot of technical analysis methods. I mean, even if I go back to the chart, I mean, I see here support roughly at 110.17. I don't see anything else. Fib extending the rebound, as you see, gave us an equivalent target to that. So I don't really see any support between here if we do break below this 111 area and 110.20. Hi, Claudia. Stelio, anything new? Because so far I'm seeing a little bit of a rebound from the euro. Has he?
Nothing, no. he's saying the same, risk tilted to the downside due to geopolitics and the inflation is muted, nothing new. I think that the risk is, and we're talking about, people are talking about this on the chat room, is that the market's quite short the euro. I mean, justifiably so. So we might see a little bounce.
Not going to be surprising if we see a bounce if the market gets disappointed that besides a general direction, and everybody was certain about the direction, right? I mean, everybody was certain that Draghi and the ECB are going to be accommodative. Everybody was certain that they would guide the market for more stimulus ahead. I think that the market is going to be disappointed if they don't see evidence that there is already, some work in the pipeline, so some more certainty and some more urgency in pressing the button. You know what I mean? So yes, if through his remarks and the Q&A, he doesn't show that they're willing to go into it, imminently, we're probably going to hold this 111 area. But if he does so, all that evidence and we lose 111, we're headed lower. Anyhow, 111 is definitely a very critical area. And as I said, if we lose it, then we should be moving 80 pips lower in no time. Anyhow, I'm going to start covering the rest, Stelio, and if we get something moving, we can switch.
Gotcha.
Okay. Now, so back to what I was saying about the Aussie and the Kiwi. So the Aussie and the Kiwi, both of them showed some evidence that, a larger rebound might be underway. And there is still a chance that that's the case because we might still end up putting a lower low here. But keep in mind that this failure of the inverted head and shoulders formation after a false break higher, if I go to the Aussie Yen, we visited that yesterday as well, you're going to see it's even more obvious there because the Aussie Yen actually, there it is. So the Aussie Yen never broke higher from that inverted head and shoulders formation. It actually retested that neckline multiple times. So far, it has failed to produce follow through. There is still the chance that it will do so if this proves to be a triangle. But if for some reason we fail there is the outlook for the Kiwi. Kiwi is still striving to hold this previous resistance now acting as support. Then there is the chance that what we've seen so far has been a corrective move that has already run its course. Okay, so Kiwi, for example, those are the two possible outcomes, right? Key area here. If we lose this, I think that we might be headed quite a lot lower, and that would be even more evidence. And you can draw the equivalent formation here instead of an inverted head and shoulders formation. This might just be some kind of a pennant. So worth paying close attention to this ascending trend line support. There you go. This one, because if we lose this, we're headed lower. Okay, so Aussie and Kiwi should hold these areas. Bulls should definitely defend these areas if they want to see more upside. Because if these areas break, I think we're going to be retesting the lows rather soon. And in general, that adds even more fuel to the bullish breakout for the DXY. We had anyhow made very clear that the DXY was holding up very nicely. The move lower was corrective in nature. We've been, toying around. We've broken above this descending trend line resistance. We've now been toying around with this 97.70, 97.80 horizontal resistance area, and it looks very likely that we're going to continue higher from here. So the next few days are going to shape that. Obviously, 31st of July, when we have the Fed meeting is going to determine what happens from there. Because after the Fed meeting, I think that the dollar will be finally free to actually get some kind, at least, of a short-term trend. But I will ask a question. Why did gold drop from 1432 to 1416 in a few seconds? It is recovering now, trading at 14. Let's have a look at gold on the shorter term scale, time frame. Gold, there it is. The initial jump was when we got the statement, by the way, because I noticed. So I'm guessing that the initial jump was the market believed that Draghi is going to offer more than he has done already. So somebody was trying to front run the market, and so far this hasn't been proved to be the case, and that's why we might be seeing this pullback. But in general, keep in mind that during announcement days and at the time liquidity is rather thin. We are anyhow in the middle of the summer, so I don't think you should try to produce an explanation for every spike you see in the market. It really is a futile exercise. I mean, it's not going to offer anything. So that's why I also don't like to scalp the market, because in the very short term you can see spikes and moves all over the place, and very, very frequently there is absolutely no explanation for that. It's just a big order comes in the market. If liquidity is thin, a single big order can move the market on its own, and then if there is no follow through with other orders coming in, the market will retrace that move rather quickly, and it's as simple as that. If DXY can stay under 98 resistance, it would help Aussie, Kiwi, Euro. Yeah, obviously that's the case. Gold analysis, please. Nothing much to say about
Steve,
gold.
sorry,
Yes,
just to interrupt for a very quick comment that Draghi made. He actually said, and I quote, the outlook is getting worse and worse, especially in manufacturing. So that's, it's dovish, very dovish comments. But the euro is not doing anything.
Coming back.
Yeah.
Yeah, the euro is coming back so far. So we saw a break lower by just like, what was it, like 2-3 pips? And so far, that has been it. So what we said before remains.
Huge range.
111 is key for the market, okay? Key. If we hold here, fine. I mean, we can see rebound. Yes, what everybody has been saying in the chat room, the market is one-sided. The DSI, the Daily Sentiment Index,
14
is oversold, I think 13 or something like that.
Yeah. 13. I had my bar mitzvah at 13.
Let me pull this up actually.
I became a man, and that
14.
was even before puberty. Go ahead.
14.
14.
By the way, silver RSI has been 90. If we want to look at extremes, the extremes here are the euro, natural gas at 11, silver at 90.
Steve Volge 99. Fade him.
Okay, so Euro USD more or less not doing much here. This is a 4-hour chart, so don't believe that this is like a huge move you're seeing here. This is
Steve,
simply
did you have any numbers in the S&Ps up here where we stalled? A lot of people are looking for 30, 40, 30, 50. I only say I'm only asking for selfish reasons because I started shorting it yesterday.
3050 is the 161.8% extension of
the that's last, why, yeah.
Of this last corrective move lower, this one.
3050, okay.
Yeah. 3050 looks like a good level. 3033 is the 127% extension of this move lower. So these are areas of interest. And then if you're looking at the 161.8% extension of this larger correction lower, that comes at 3,101. So 3,100 also an important level, not only because it's a round number, but it's also the 161.8% extension of the correction that we saw in May.
A lot of wave guys have 3250 they've been talking about for quite some time, years actually. I don't know what's there, but I think we're topping today the boy who cried wolf. Looking for some gravity, Draghi. Help
Let's
me
see.
out here.
From a technical perspective, I have to tell you, I absolutely see no technical reason yet that I would fade this.
How about divergences everywhere?
Divergence is not a signal. Divergence is, let me put it in cooking terms.
Oh, get Andre in here.
Yeah, let me put it in cooking terms.
Okay.
Divergence is not like an ingredient. It's like the salt and pepper. You know what I mean? So once you have the ingredients there, it's nice to have the salt and pepper as well. But simply trading on divergence, I think it's absolutely impossible, because strong markets tend to create divergences for long periods of time before it actually plays out.
Okay.
So,
well, I've been using it for the main course for many years. And you're the salt, and Stelios is the pepper. And Grega is dessert.
A joke came in mind, but it's so.
No, don't.
Please. There goes the S&P, Steve.
Where is it? It's just like
look.
300.
The salt and pepper is weighing it down, and I'm going to get bailed out for my
by
short
the way,
at 78.6.
Keep in mind if DXY gets rejected once again from here, and that's a big if. It's very, very early. Keep in mind that obviously we're going to see a Euro USD reversal, and people will start talking about a double bottom, but also just check cable at the moment. Cable is currently retesting once again this descending wedge. Okay, so key level here for the cable, and if we break above that, then even more importantly, we have this 125.70, 125.80. If we break above that, we then have in hand an inverted head and shoulder formation as well.
That ought to take EG down to 87, don't you think?
Oh yeah. I mean, if cable breaks above 125.80, in my opinion, that should move the pound pairs across the board higher, at least for a period of a few days. So I'm paying very close attention to it.
You brought that up the other day with I think the guppy in the same formation.
Oh, yes, exactly. Let's go to the guppy and you're going to see it.
See, I remember not only your trades, but your analysis.
Let's not go to the Yes, Delio?
Interestingly, Draghi said that there was the decision today was not unanimous.
Really?
Yeah, and the euro is
who descended and in which direction? Because that's the important.
We don't know. As far as I can see, we don't know. He just said it wasn't unanimous. But the question is, surely nobody has actually gone for a tightening, right? So
no, yeah, obviously.
But why then is the euro taking this as euro positive? I don't get it. But
just too many shorts still.
Yeah, could be.
What do you think?
I think that the market was ready to be pushed lower below 111. What it needed, as I said before, was some tangible evidence that the ECB is not only guiding forward, but they're actually very, very, very close to pulling the trigger. Now, Draghi has been speaking for some time. He hasn't yet delivered evidence that they're very ready to, make the next move. And I think that disappoints the market and makes the market now put its focus solely on what's going to happen at the 31st of July. I think the thinking now shifts to the following. Okay, so the ECB is not about to move like imminently, but we know that the Fed is about to move imminently. So let's see on what the Fed has to deliver and what kind of forward guidance having to do with cutting rates, because we know that they're cutting rates. I mean, the market is already pricing in more than 25 base points, so they're cutting at least 25. Okay, and there are some market participants that expect 50. Personally, I think it's not going to be easy for them to deliver a 50 base points cut, as we've said the other day, with data having somewhat stabilized, indices being at all-time highs. I find it quite hard that they will deliver a 50 base points cut.
It's going to be great to get Amelia Bordeaux's perspective in about 5 minutes. She's been, bullish a dollar, bearish euro and cable for a while. What a great day to have her with Draghi.
Yeah, I'm with her for the time.
I heard you met her at the
expo. Yeah, absolutely.
Okay.
We
had
met
a drink.
Coffee. We had there was a nice lounge there that they offered for us participants, like food and drinks, and we spent some time there with Joe and Amelia.
Did you talk her ear off and?
I think,
like everyone you talk to? Huh?
I think she's at least as talkative as I am.
That's amazing. All right. Go ahead, wrap it up, and we'll have Amelia on in about 5 minutes.
I promised our friend here a view at Aussie Swiss. So this is my viewpoint in Aussie Swiss. As you see, once again, got rejected from the retest of this previous triangle. So as long as that's the case, let's move things a little bit. That's the outlook. So path of least resistance, as long as we remain below this trend line, is lower. Now, if we break back above that, then it becomes quite tedious and complicated again. But I think then we open the door for a retest of that trend line. Okay, but I think there are better opportunities to trade the Aussie out there instead of trading it against the Swiss. That's my point of view. So I have no idea why you would want to choose the Swiss to trade it against. Trading it against the euro, trading it against the pound, even the dollar, I think it looks more clean. Some people are like enthusiastic with the Swissy. Question here about the pound Swissy. You want to know about the pound Swissy? This is what we drew the other day. A likely rebound from there. Why? Because that's an important horizontal support resistance area. And if you want to make it even more spicy, you can also see evidence of a descending wedge here as well, from which we're breaking higher. So pound Swissy, add to that the salt and pepper, as we were talking about before, this RSI divergence. Pound Swissy against the lows looks very, very decent. Okay, it looks very, very decent. There you go. And it doesn't mean it's going to move lower from that. It can even, move quite a lot higher. But I mean, even if this is a corrective move, I would expect a retracement back to 125. Okay. HF overall looks strong. Yes. It has been during the past few weeks. The Swissy has been bid. Yes. Keep in mind, though, the Euro Swiss, which is what the S&P pays attention to, the Euro Swiss was at support, and they're trying to defend this. So if they go in the market defending the Euro Swiss here, you're going to see the Swissy weaken across the board. That is an extra reason why currently the pound Swissy looks decent to the upside. Okay, because you also have the S&P on your back. I think they're paying close attention to this area in the Euro Swiss because it is an important one. And we also have a question about crude.
Steve, one more last thing to say. Draghi said that there was no discussion today on rate cuts.
There you go.
I don't know how to interpret that, but surely they should have been. But yeah, that's what he said.
So that proves exactly what I said, Stelio.
Yeah.
The market got disappointed for one reason and one reason only. They do see that the intent is there, but there seems to be, from what they're saying, no sense of urgency. And the market was expecting that besides the intent which we got in the initial statement, Draghi would also point to a bigger urgency of beginning the next cycle of stimulus. And I think that's what gets the market disappointed at the moment.
Well, if they're not there, there's no urgency now. There's going to be some later, and it's like it's
question
like
about
Dale said before. Is when they asked this guy, "How did you get bankrupt?" Yeah, slowly at first and quickly afterwards.
Okay, having to do with crude. I like very much the area from which crude got rejected yesterday. And I actually showed this chart on the chat room yesterday when we were actually testing the highs there. And I actually wrote, be careful, crude here is at resistance. And then we turned lower. Now, so far we're holding this little channel, but so far this move looks corrective to me. So I would really think that the chances of a resolution lower are significant. Okay, look at the RSI profile as well. This rebound in the RSI also looks corrective in nature. So
look at that salt and pepper.
Yeah, look at the salt and pepper. Yeah, that's it. Quite a nice candle on the 4-hour chart for the DXY, coach.
Yeah, Euro too, and
oh yeah,
EG.
it's the inverse actually. Yeah, it's the yeah, there it is. I mean, on the Euro chart, we now have the 4-hour candle has closed, and this was a very, very nice outside white candle, key reversal actually, if you look at the 4-hour chart. So I can say
set up a great rally to sell.
I can say one thing for sure. If you like the Euro to the upside, judging, I mean, the combination of the technical event that we breached the previous low for just like 2, 3, 4 pips, whatever it was, and then we posted this nice outside white candle. I think that there is some very decent risk reward against the low for a little bit of a larger rebound higher. Now, how large that's going to be, I wouldn't be jumping the gun here. I can tell you that much. I think the market is now going to stay focused until the 31st on Fed expectations and nothing else.
Look at the S&Ps, and then I'm bringing Amelia on. Pretty good candle to the fading there too.
The S&Ps are getting decimated.
Look at that.
They're like 300
I'll talk to you. All right, you laugh now. I'll talk to you Monday about this, okay? Anyway, things always look the best at the top, right, guys? And the worst at the bottom. Classic example today, Euro and S&Ps. So anyway, should I bring Amelia on now?
Absolutely, it will be my pleasure.
Okay, stick around, everyone. Amelia Bordeaux. You can find her on Twitter at Amelia Bordeaux. And Amelia, let me just make sure that you're unmuted. You are.
Cool.
Welcome back to Face.
Thank you so much. How are you?
Good. So
hey,
if you want to, Steve, you want to direct Amelia how to share her screen?
Yes, Amelia, if you mouse over this nice pop-up menu from Zoom, you'll see there is one green button saying share. So if you click that, it's going to ask you if you want to take the screen from me, and then it's going to give you a pop-up window for you to select which screen you want to share.
Share if you care, Amelia.
No, I don't see share. I see you're viewing Steve's screen and then view options, and
yeah.
I need to do something. No. Let's see. It doesn't like it. Follow presenter's pointer. Request remote control. Maybe that.
No. That's another
share.
Okay.
It's a green box. It'll say share.
Okay.
Green like money. Well, lime. It's kind of lime green. The counterfeit I print up. Okay. The Fed prints up.
Oh, here it is. Okay.
Found it.
Okay. Super. Let's share the screen. Share. You see my screen now?
You found it. Yeah. It's coming up.
Okay,
not yet,
are you seeing the world? And I have a couple screens. Are you seeing the world interest rate probability screen for United States with a bunch of
Yes.
Okay. No, I just thought we'd start. Yeah, I think Steve and I tied for talking.
Okay. All right. Well, what a great day to have you, Amelia, with the ECB today. And I'm assuming you're still long-term bearish Euro and cable. And
yeah, there's so much going on.
You welcome this little turn in Euro to set up a shorting opportunity for you. And And go ahead and just start where you wanted to. You're looking at
Okay.
rates, right?
Yeah, I just wanted to, you guys were talking about probabilities a little bit of interest rate cuts for the ECB and for the Fed. So I just thought I'd log in and look at the world interest rate probability chart. So here we are with the overnight interest rate swaps for the Eurozone, like what's actually priced in. So you can see the next meeting is September 12th. They take a break. They're on vacation in August. I mean, not really on vacation, but they just don't meet in August.
Okay.
And so there's going to be a lot of focus on the September 12th meeting. And you can see here that there's an 82.5% probability that they're going to cut the deposit rate
From
by
today's meeting, personally, Emilia, I don't know about you, I would take the under of the 82.5%.
You would what?
I would take the under. I mean, sorry, this is betting terminology. I mean, I would take, if I had to bet against or for the 82.5%, I would bet against. I think the chances are lower than 82.5 that the market is currently pricing in.
You think the chances are lower that they won't cut 10 basis points?
Yeah.
Yeah, okay. So, but this is just what's priced into the market. So
I know. I'm just saying that I think.
Then you would be long euro if you don't think they're gonna.
No, because that's a different story. With because I would be long euro against what? That's a question. You know what I mean?
Look at the S&Ps now, Steve.
Yeah, I would be long.
Sterling. Well, against sterling, because I have a very bearish view on sterling is my answer to that. But let's keep going. So, all right, we're just this, and then we have just looking at the U.S. in the debate now between a 50 and 25 basis point cut. This has moved all over in the past week. It's really interesting. Here's this red line, which is the probability of any size rate cut at the meeting July 31st, and it's 100%. So the market is definitely 100% priced, not a consensus survey, 100% priced for a rate cut. And so here we are, July 31st, it's priced in 82.5% for a 25 basis point rate cut and 17.5% for a 50 basis point rate cut. So yeah, that 50 basis point rate cut is going to be hard to get July 31st, it looks like, but the 25 basis point rate cut is really kind of baked into the market already.
Yeah, so let's get to price action and actionability. And the last time you were on, you were still negative. I don't remember what your longer term objectives. I do. Yeah. What really kind of stayed in my memory was your training and having been at a bank, that if you miss a move like this, like the long dollar play we have working here, you not only don't make money, you lose your job. So how are you keeping your job and holding these positions through days like this, Amelia?
There's a few ways. So I just wanted to show you this chart. We talked about this last time, and the next chart is going to be a little more interesting. I'm just setting up the next chart.
Oh, okay.
This is the DXY index here in white, and then these are the U.S. yields, 2 and 10 year. And you can see that when the Mexico tariff tweet by the administration came out threatening tariffs on Mexico, that was kind of really the nail in the coffin for the dollar temporarily, and also U.S. yields, which is interesting. And now we see a turn up in the dollar index a little bit, and yields are basically sideways. So, we still have that safe haven bid here in the U.S. dollar, which I think will continue. And then we talked about this next chart. Oh, here it is. Last time, when people were asking, we were discussing something about the DXY and how it would go, and I just mentioned that the euro is 57.6% of the DXY index. So I just wanted to chart actually both of them together so you can see it's really important to get your euro view right for the dollar index view. And you see here is the dollar index, and this euro inverted on this side. So when this line is going up, euro is getting weaker and the dollar index is getting stronger. And you can see for the most part how closely they move together, which is why it's important to have a strong
Can I
euro.
ask you this while you're on it, Amelia? Do you know why, I sometimes use the Swiss for a tell. It's not as reliable as it has been since, the unpegging. And, if I take you way back, I used to, follow the D-mark. It would be the Swiss D-mark against each other for early tells. How do you explain the fact that USD Swiss has not kept up with the strength in the Dixie?
US dollar Swiss?
Yeah, US dollar. But I'm just, just something I've been thinking about because I've been using it as a tell. While the dollar index is making higher highs, the US dollar Swiss is making lower highs.
Lower highs. I think Swiss, in terms of institutional trading, this is just a little bit of a background here. Okay. It's really hard in terms of the institutional trading, and the reason why, I want to say this the appropriate way. There is some mistrust among institutional traders around trading the Swiss franc who are around my age and experience in the market. Yeah. I do not like to trade the Swiss franc, and that was because of when they dropped the peg to the euro.
Yeah, I had the same reaction. Do you think it's
genetic? I feel like because Swiss managed their currency for so long, from 2011 to 2015, and suddenly dropped the peg and it strengthened, that was a horrific day on the trading floor. Horrific. Yeah. It was so hard. And so a lot of people my age with experience on the trading floor that day, if you ask them what's their main safe haven currency, we all trade yen instead of Swiss because we just don't trust Swiss. And also for my career, obviously yen was free floating, unmanaged. I've watched yen so closely in terms of my preferred safe haven that's not the dollar. Swiss, I never saw trade appropriately for years because it was managed. And so in terms of feeling a currency, it's hard for me to feel Swiss. So I don't have a good answer for you, but I know on the institutional side, some people do share my view as well.
I think that was a great answer. So I'm glad I asked the question. So I'm not going to interrupt you. I want you to go to, what you want to show, but really, because I felt the same way after that day. Why trade an instrument that can do that?
Exactly. And so
there's like the old days, Mexico devaluations overnight and people lose their memberships on the IMM.
Right. Certain brokerages closed. It was just, it was a very hard morning that morning on the
trade. Okay, sorry I brought it up.
That's okay. But anyway, back to euro, and here we are, we're rangy. Yeah. So a downside break of 111, the figure would be good, would be really huge. I think a lot of institutional traders really want to push euro lower. Obviously, that's hard to do with the Fed rate meeting coming up, as we discussed, July 31st. And everyone knows they're going to cut. So there's going to be this time where, I don't really see euro much lower until that September rate meeting, when it looks like they're going to take, policy action at that time. And also things are going to get a little dicey for the euro post that, remember, because though we don't know how things are going to develop, and I'll speak about this in a minute, we do have Brexit deadline October 31st. And what we tend not to talk about for Brexit, this is another euro chart, longer term, I'll refer to it in a minute, but what people don't remember with Brexit is we're obviously, the market and everyone's so focused on the UK side of it, but it affects the EU also. So October 31st is the hard deadline, and October 31st is Mario Draghi's last day as the ECB president. Christine Lagarde takes over November 1st. So can you imagine?
I was going to ask you. I was going to ask you that.
So there's a little dislocation in terms of the handover, in terms of the Brexit timing. And I think that people, though we certainly trust Christine Lagarde, the market's super happy to have her as the next ECB president. She's dovish, people like that. It's more the uncertainty on the UK side and how that's going to impact the EU. And so I think both currencies are going to be affected into that October deadline, unless it's extended prior to.
She also has a lot of experience in bailouts.
She does,
IMF, right? So do you think that may be a reason some type of restructuring might have to occur in the Eurozone, and her expertise, that's her bailiwick, to be able to handle it?
I mean, we'll see. It's really hard to make any decision on how it's going to proceed, but also Ursula von der Leyen is a new EU president, and she's been very clear that she wants to work with the UK to maybe even extend the deadline. But, that's, obviously Boris Johnson just chosen yesterday as the prime minister, elected prime minister yesterday. He's come out already with still his hard line, October 31st, do or die. So, when you give the market a binary event risk, like no gray area, like yes or no, in or out, do or die, deal or no deal, that's when huge moves take place. And we're only about 2.5 months away from that potential, unless we get new information in the meantime. And so, yeah, things are going to get dicey in September, real dicey. You know, after Labor Day, full liquidity comes back into the market.
Right. And the Hamptons empty out.
Yeah, and the Hamptons come back to New York. And it's game on in September. Why? Because traders only have, you know, about 4 months before their books close to make their P&L if they didn't make it already for the year. So.
Okay, so you want to move on to?
Yeah.
You want to move on?
Term euro. You know, I mentioned the 111, the figure, 110, the figure, and then, you know, down here around 105. So, you know, if we can break 111, traders are going to push, but I don't see this move now. I see this, you know, more so for a September.
How much of a bear market rally do you think we could have in the euro? If, say, for example, we're getting a short-term low, they took out the prior low, kind of a stop on Amelia.
Yeah, I mean, I think we'll come back. I think, see this range here, the white, I think we'll come back to, like, say 113. This is like 112.90, but like 113. I think market participants don't really want it to get way too much to the top side. They're trying to, you know, it was locked in this trading range for so long here that I think that's a good trading range. It'll just go back there. People don't want it to let it get away too much.
Okay, and how about cable? EG's been working, so euro's been weaker than cable. So how much of a pop can we have in cable into this Brexit time frame? And you know what you know what'd be interesting is to look at where markets were on the Brexit vote, which ended up being a binary event that you could have faded, but the initial reaction, I wonder where the pound was trading on the Brexit vote.
Oh, it was 150. It was 150 the figure, because people were positioned for topside break. I can show you that in 1 second, but I just look at this. This is a sterling dollar 3-month vol. So you see it collapsed in April. That's when they set the deadline. They moved it from April back to October 31st. So vol collapses. And then all of a sudden now Boris Johnson is elected, and look at vol just starting to climb in cable, because we know this 3-month vol, that's how far away we are from that October deadline. So it's, pretty interesting. I can show you a chart into, let's see, 06.
When the dollar reasserts itself, is it your view that cable has further to fall than the euro on, say, a blow-off wave to the upside in the dollar?
Yeah, because, I mean, if we look at the central bank, the Bank of England, Mark Carney is like the ultimate, he's the president of the Bank of England, or the chairman of the Bank of England. He's like the ultimate doomsday prepper with his, you know, financial market stability reports that put out the Brexit kind of like probabilities and scenario analysis. And so he's been really countering Boris Johnson in the media. You know, anytime Boris Johnson is like, everything will be fine, you know, Mark Carney refers back immediately to the forecasts, which are pretty devastating for a no deal.
Where did he talk about pound levels in that worst case scenario?
He did. You want me to show you?
Yeah.
What he said. Let's just go up to this presentation real quick. I'll show you.
Who is that model that you're using on your website?
Here's Mark Carney. He's the ultimate doomsday prepper, and let's see what the financial stability report says. So this is their warning about a disorderly Brexit. This is not their base case forecast. Their base case forecast is still an orderly exit, but the risks are rising for disorderly. And here's what he said. If there's a disorderly exit, it also, the Bank of England is the it. It also sees the pound in an unprecedented collapse below parity with the US dollar.
Wow.
Yeah, so that's not my forecast. Remember, that's the Bank of England forecast.
Okay, right. 117, is 117 closer to where you think it could go? I think that was what, the 08 low?
That was the, let's see, that was the 2010. That was like the October 2010 low. Let's see. This is, sorry, Rich, real quick before we go through this, because it's here. Okay. This is last week when Boris Johnson said he would, this collapse in the pound was when Boris Johnson said he would suspend Parliament right before the October 31st deadline just to get whatever results he wanted through Brexit. So the market did not like that, and it came back. It fell, and now it kind of came back on a relief rally that, oh, now there's a prime minister relief rally, and now we're just trading sideways because nobody really knows what to do. no one really has conviction on the upside of the pound. And then here we are. So this is Brexit. No, where is it? So wait, this is the low.
After the vote.
Yeah, after the.
That was it. So it was under 140 then.
23 years ago. Let me just pull it up. 2016. Oh, I think I have it here actually. Let me just pull up. I have a better chart here. Here it is. This is a referendum. So this is June 2016, June 23rd, 2016. So it stops trading at 150 the figure because everyone thinks there's going to be a topside break is how the market, how institutions were positioned. And of course there wasn't. And so they vote to leave and we saw a huge collapse over the day and a half, 14.8% collapse in the pound.
And the low
was that's not really true. There was another collapse in October. There was another, here's the flash crash. So this is the referendum in 2016. And then there was a flash crash in the pound in October. And the low there was the 118.41.
Okay, so that's what they'll be gunning for.
Yeah, there'll be that flash crash low. So the two levels, the 1841, one figure 1841.
Okay, I know that we're focused on FX here. Any other markets that, like you say, the yen is your safe haven, preferred safe haven trade. Do you have a view on the yen? It seems to really want to dig its heels in and possibly not need to be a safe haven and head higher. What do you think?
Yeah, I mean, the dollar takes some relief from the yen in terms of safe haven trading, but yen is still the market. As I explained, my view on the Swiss, and a lot of people my age in the market at least share that view. Yen is the go-to safe haven currency. So I mean, I definitely, in the event of some real risk off, I definitely see yen at least back down to 107 the figure and easily down there quickly, and we can even move lower if we have to, but it's just a risk off move. Yen is a little bit placated right now because the dollar has some strength, because central banks in the G10 are finally cutting rates. I mean, Aussie's already cut rates twice. The Fed's going to cut rates, ECB's going to cut rates, and most likely in September. And so New Zealand's cut rates. So, some pressure in terms of global growth has come off because central banks are responding. But you see, that can
chart looks pretty good.
Yeah, there's not a lot of support. There's not a lot of support below that's 107.17. Yeah, so below 107 the figure, there's not a lot of support. Between 107 and 107.
So I think you were showing the Aussie, and I think the Aussie was challenging that flash crash that we had late in the year last year. That wick, that big wick you just showed on yen. All the currencies experienced that. I think it was New Year's. Aussie penetrated it, right?
Yeah, and Aussie's been really challenging. Obviously, I mean, I've talked a lot about it, like Aussie lower, and that did not happen. And part of the reason was, at least over the past month, there's been a large rise in iron ore prices, which really have brought Aussie higher. Last night, Westpac issued a new forecast for the Reserve Bank of Australia, which moved Aussie and the Asia time zone lower. They're now calling for another rate cut in October. So Aussie's already cut rates twice, June and July, and now Westpac sees another rate cut in October. And so when you just think about the timing, if you think Brexit in October, RBA cutting rates in October, maybe the the European Central Bank taking some sort of rate action, either cut or re-announcing a bond buying program in September,
it's so scary. I'll be burnt out by Halloween.
At the same time,
I won't be able to celebrate Halloween, Amelia, because I'll be so freaked out.
On Halloween. There's no Halloween for us. Trick or treats are going to come on the trading floor, not outside.
A good time not to be away. And
I just wanted to point out, I'm watching this. This is just interesting. I'm watching Aussie Kiwi.
Okay, I am too. I was just going to ask you about it.
Yeah, it's just sitting here. It's really a frustrating trade, but I like to just watch it because it's been sitting above this 104, the figure, which is a big level. It's just hovering there. It's not really moving up or down. It's very frustrating.
What's your bias?
I like it lower, so I'd like to short it, but on a downside break of the 104. So I'm not shorting it now. If it breaks 104, then I would short. And, you know, we're pretty clear till 103, the figure. Look at that. There's nothing here.
Yeah.
So 103, the figure, you know, would be honestly my target. Because once Aussie Kiwi moves, it moves pretty fast.
What's that?
Once Aussie Kiwi moves, it moves fast. So.
Yeah, it does. Yeah. So you think it's just going to negate the whole rally that we had a few months ago and take out that low?
Yeah. So,
Okay.
but it's just a frustrating trade. I mean, there's nothing to do right now, but it's something to definitely keep on your radar screen, you know, to watch.
Okay. Any other crosses?
This is a strange one, but this is an example. It's just on my radar screen. I'm not entirely sure what to do. When I say I like it lower, it's kind of funny. But sterling CAD is interesting to me. And the reason why it's interesting to me, look at this giant move we just had through May to July.
Yeah.
CAD gets stronger. Look at how fast this was. Look at the trajectory of this. And,
Yes.
you know, one of the reasons for this is just because, look at that, almost 9%. One of the reasons for this is because the Bank of Canada, importantly, as we've just discussed, everyone cutting, like most G10 cutting rates, most G10 dovish, Bank of Canada is not capitulating yet. They are not turning dovish. So the Canadian dollar has been strengthening, especially against, obviously, the pound, as we see here, because the pound has so much uncertainty. So this is a good relative value trade of uncertainty and, at least right now, the Bank of Canada certainty. So until the Bank of Canada, I mean, it's already run a long way. I'm talking more in terms of Brexit. I know it's ridiculous to say that this might head lower, but if the Bank of Canada doesn't capitulate in September, and, you know, there's a lot of Brexit issues in September, the negotiations into the October deadline, you know, you could very well see this. You could very well see this lower.
Why hasn't the BOC joined the?
They turned dovish. Yeah.
Okay. Why haven't the BOC joined the central bank parade of easing and moving back towards QE again?
I think that they're not as, you know, the majority of their trade comes to the United States, and so they're not as affected by the global kind of China-US trade war. Also, they're obviously really impacted by a slowdown in the United States economy, should that occur more precipitously. But I think they're of the opinion that it won't. And so, you know, because while growth is slowing here, it is still holding up until we kind of see a payroll capitulation. We haven't seen that, but, you know, payrolls are a lagging indicator. All employment indicators are lagging, so that'll be the last to
yeah, that's interesting that they're, you know, since they are a major export economy, that they're not in the race to the base to even get a bigger edge on exports.
Yeah, they're not right now. It's a little bit surprising, but obviously, and that's the key factor to watch for CAD. You know, should the Bank of Canada turn dovish, then CAD's really gonna, you know, then CAD will really weaken. But right now they're not, and so that's, you know, while these trades could go either way, I don't want to sound unsure. I just want to sound like, you know, it could break much higher or much lower depending on Bank of Canada. And so I'm watching it because obviously this cross has moved super speedily.
Maybe it's because the Raptors, Canada won their first NBA championship.
Yeah, that's true.
They're, you know, pride before the fall, Amelia.
I know.
So, all right, what a great time now. And I really appreciate you coming in here and stepping in. It's always a pleasure having you.
Can I tell you really quick about a product? I'm going to offer you guys. If you have any interest, you might not.
I was going to bring you to your website. I'd like you to let people know how they could follow your work. And
yeah.
Okay.
Here's my website, marketcompassllc.com. And I have a new product. It's a webinar monthly, and it's the Global Macro Event Risk Webinar, where for the next 3 weeks forward, I go through the major event risks and look at levels in the G10 currencies. And obviously, there's a lot of events, as I mentioned, coming up between now and October, especially. So I want to make you aware of that. I want to make you aware of timing and what I'm looking for. If you want to purchase the webinar, I'm going to give you 2 different discounts. So the promo code is DailyFX, all lowercase. And I'm going to give you today, I'm so excited. This is the 3rd time I've been on. It's the 3rd time's the charm for everyone. I'm going to $100 off the annual subscription rate today, and that'll bring it down to $300. And then if you just want to subscribe on a monthly basis, you'll get $10 off today only for $30 on the monthly. It only
Okay.
a monthly
Take a
rate.
screenshot of that, everybody.
Yeah, Daily
And-
FX is the promo code, all lowercase, and only till midnight Eastern Standard Time today.
Okay, and to follow Amelia on Twitter, just use her name, Amelia Bordeaux.
Amelia Bordeaux. And I'm on IG. If you watch IG story, Instagram story, I do update on markets there too, and that's at Market Compass on Instagram.
What a great time to have you here, Amelia, with Draghi, and thank you for sharing that we're going to have some opportunities that we don't have to chase the euro down here, and and all of us, and giving us a lot of time to, not a lot of time, but to really prep. And part of prepping is building up your war chest for the battle in October.
Yeah, so, and I put this slide out at the last presentation just quickly. There's a lot of uncertainty, and you have to remember, you have to control what you can control. So, people tend to think sometimes like, oh, markets are so uncertain, there's nothing we can do. And there are things you can do. You have to control what you can control. You have a strong event risk calendar. And as you just mentioned, you should start preparing some of the strategies that you can use, or the scenario analysis, and what trades you would apply.
Yeah, don't impulse trade. And a couple of months, you could already start thinking ahead. If this does that, what will I do into that scenario? So, the mental, psychological preparation for going into war and trading are pretty similar. So, Amelia, I would be glad to have you in the foxhole with me anytime. And really, I'm a fan. You have a lot of fans here, and may pips rain down on you in the fall, so that you have a bountiful harvest like the farmers to get us through the winter.
For everyone. Well, thanks for your time. I love being part of this community. And you can just reach out to me if you have any questions. My email is on my website, or you can just tweet it.
Okay, Amelia. Good hunting, my trading warrior sister. Thank you very much.
Thanks for your time. Take care. Bye, everybody.
Bye-bye. Okay, that's a wrap, everyone. See you for TGIF tomorrow. Good hunting the rest of the day. S&Ps, we're about 14 handles off the high of the day. The boy who cried wolf is saying, ow! Remember, just don't just count your pips, count your blessings. Adios, warriors.